Good morning, everyone. So, weekly review. This is what I was looking at Sunday. Nothing too crazy. I didn't have like a set bias. I mentioned the dollar, how we failed to hold this order block, this reclaimed order block. The bodies have been closing there, and I wanted to see if it would end up going really quickly to buy side liquidity, but it did not do that last week. So this week I was looking at this area in the red and the order block here to see if it would support price. Now we've traded down to this order block, and this is a weekly chart, so it's a pretty strong level. I want to see here now if price is willing to make a run higher to buy side liquidity, and I'll be watching it can continue consolidating, but I want to see this order block support price here. That's basically what I was referring to. And there was SMT at the beginning of the week between the pound, the euro, and the US dollar. So this SMT is still present. Like, the pound is making higher highs. It's very odd. It's still making higher highs compared to the dollar. The pound is very, very strong. So I'm just pointing that out. And for the NASDAQ, I said I wanted to see the Dow catch up. And so it's possible we see higher prices. And I'm mentioning May 29th, the Fed is buying back rolled over treasuries, which would push the bond market up. And that would help stocks continue to go higher. But the bond market, I was looking at this area, and there's a weekly bearish order block here. And so I wanted to see the dollar the same way, similar how it traded down to this order block. I wanted to see it this week bounce up and run higher. I also wanted to see the Dow find resistance at this order block, and so far it has. So far it's stayed away from this area. It hasn't really returned there. So we could be seeing a reversal, but I didn't have a set in stone bias yet. We could see an order block close lower tomorrow and reverse back to the current price range, or we could also continue running higher. So yeah, I have no bias. This is after Monday's trading. This is how the daily candle closed about. So we've taken buy side liquidity already. We've retraced back a little bit into this daily fair value gap, left it open, and continued to trade higher. All right, with Monday being a little explosive. Now, I did mention this is looking like a bull flag, right? So if we're consolidating here a little bit, we retrace and we run up above this high. Maybe there's a lot of breakout traders, and so it's possible that we see a high of the week here and a quick run back down to these levels. So this was at 9:30. I said I wasn't expecting much movement this morning because it's Monday, there was no news. And 9:30, if you look at what 9:30 did, it took out, this is the midnight open with the purple dashed line. So you have the low and the high of the day. The low of the day is just about here at that opening candle there. And to get 9:30, that takes out basically the low of the day almost, I believe, but it forms the daily range already, and it runs up and takes out the high of the day. So the first 15 minutes of open, the first 30 minutes, that basically creates the whole range of the day. And so I wasn't like looking at all. I didn't expect 9:30 to move that much, but I wasn't looking to do anything after that. In the afternoon, it wasn't terrible price action, because in the afternoon you had a high and a low. This was another big range after this consolidation that took out the high and low of this consolidation. So this is a dealing range, and price, once it took out the highs and it made people buy the breakout, and it came back down to stop them out and made people sell the breakout, it had nothing else to do. It did not continue expanding. It didn't have to go back to the highs, so it ended up just consolidating at 50%. And so each higher bound of the range you hit, you look to go the other direction. But I wanted to see if this 15-minute breaker, once it formed, if it was willing to resist price. So this 5-minute fair value gap, I would have wanted to see an inverse. And then a start of a retracement lower. And Tuesday was really the best day, in my opinion. I loved Tuesday. Unfortunately, I didn't trade. I wasn't able to trade Tuesday. So it would have been nice, though. It started by making a small run lower to fill in this candle and leave no fair value gap. Alright, see how immediately as soon as it filled this candle, it started to run higher. And it closed back above a high, so it's still making new highs on Tuesday. So what we see here is, let me find what Tuesday is. Yeah, so we have the 8:30 morning news that runs lower, and you see how yesterday we had that breaker and we found resistance at that breaker all night, and we ran lower down to a bullish order block. Not quite to the low down here, but a bullish order block. 8:30 made that move lower, and then 9:30 brought price higher. This is that 15-minute breaker. You see how we found resistance from it, and then it turned to support later in the afternoon to run up buy side liquidity. And this is one big market maker buy model. Again, the evening sort of distorts it because it's midnight and there's not much movement there. But it would have been very nice to look for buys underneath that midnight open as 8:30 makes that Judas swing lower. See 9:30 opens up around here, kind of moves sideways, and it continues going higher. We had initial consolidation all night, and then this turned into a breakpoint model, right? So my breakpoint is this here. Right, we have a dealing range that the discount array would have been the order block at a certain time, which is the Judas swing that happened at 8:30. We leave a bullish breaker, and we get above that breaker and the dealing range, and then we don't really retrace much. We very quickly continue going up to the premium array, which would have been the buy side liquidity. So, oh no, that's the wrong one. So if you look at that, right, we draw down inside this big range. We have a higher premium array up here, buy side liquidity, and then a breaker. You see that all those up close candles, consecutive up close candles, and price gets above it. And does it really go back into it? No, it goes back to 75% of this range, and that's it. And then it continues going higher. I would have loved to trade on this, but unfortunately I was not able to. This is what it looks like on the 5-minute chart. Right, so again we have the breaker up here, the move lower, and then 9:30 opens up right here, and we have 9:45, which is when I can start to look for trades in the morning. And we have 9:45 run back down to the order block one more time, back to the order block, shaking out some early longs, or accumulating more longs down here. And then we start to run higher, leaving more order blocks or propulsion blocks. There's a nice inverse fair value gap, which is created by that run lower back to the higher time frame order block. Now, someone who is trading patterns like ICD patterns, he sees 9:30 make a run higher back to a fair value gap. He sees a little bit of consolidation, a fill to run higher, and then a nice and big fair value gap left. But he's not seeing the order block on the higher time frame, or he thinks it will fail because Monday made the high of the week, and we're going to get a reversal today. He fails to notice that all night we've been moving lower. He's just focused on the smaller time frame and looking at the patterns. That's what this fair value gap is for. It's to scare people short as price is breaking out here. It's really going lower with aggressiveness, like it's aggressive lower. But as soon as price gets above it, we don't ever come back down to underneath it. So that was the trade I would have taken. I did see it real time, but unfortunately, I had not. I wasn't going about my morning in a professional way as I should have. So I chose not to trade. So obviously that this would have been a very nice trade to take, but I made a good choice not to trade. I did watch though, and I didn't like how much it consolidated. Like I would have wanted to just continue. Maybe this summer tracings are okay, but this is a lot of consolidation here. So, not to look at how the bodies respected that inverse fair value gap. So we had this fair value gap here, which is nice and easy to see, right? It stands out. If you drag that, you see it is resistance, and then turn to support. That runs very quickly towards buy side liquidity as the 11 o'clock hour comes up, which is the London close, right? The Europe trading closing, so volatility usually settles down a little bit, and then we get just more consolidation. And on Wednesday, more new highs. As you see, this is more of an inside day. We're looking at the daily chart, and we're not really seeing any huge candles. We're seeing very small price action, very reserved, kept in a range, sort of high resistance price action on the daily chart. Doesn't mean it's high resistance on lower time frame, but it's just the daily chart. If you look at these conditions overall, this is not high probability. All right, for any trading inside of the day on the higher time frame, it's not high probability right now because of the way the daily chart is really constrained or restricted. And as you can see, there was a lot of news in the afternoon. Basically, you have 12 o'clock there, and the news really made the whole range of the day. So we had 14 o'clock to 2 o'clock FOMC news, and we had this earnings. I believe it was Target that caused, and a couple other companies. I want to talk about Target maybe towards the end, but this was obviously a huge shock. I never know if there's earnings or not, so I don't trade at those times anyway. But it was definitely a huge shock to me to see. I thought I did my review at 3 something, I think, and the other one it shows. No, yeah, so I did at around 3, and I didn't know that there were earnings. And when I came back to the charts to take all the screenshots, I just saw this, and I'm like, whoa, the daily chart just looked completely different. But we've ran down to consequent encroachment, right? Again, close to that order block that we ran back down to Tuesday, and immediately we ran back higher with earnings. So this is what it looks like now. I don't think anyone could have traded these earnings. If you look at what happened in 15 minutes, price went from 700 all the way up to almost 900. That's 200 points of range in the afternoon. But I did like the morning, the 10:50 to 11:10 macro, and I believe I was, I did record this day and I posted it, and basically I called most of the, well, I didn't think the earnings would have, but I called most of the day. In the morning I said I wasn't convinced this would be a high. I wasn't willing to short yet because I think it could come back up and make a new high, and so I was more preferring going long to get up above these highs. And during the 10:50, 11:10 o'clock 20-minute interval, that would have been a good time to do so. And I remember sitting through all this whole consolidation. It was very long, but when did I want to go long? As soon as there was, well, I wanted to go long at this 1 minute inverse fair value gap initially, but because it was created far away from this low, I didn't like the risk to reward. If it was high resistance and it decided to retrace more than it should, I've seen that happen sometimes, and the take profit is like 20 points away. And as if you know, if you're a constant watcher, I like to go for 20 points, and I don't like it to be the entire range. I like it those 20 points to be um, a portion of the bigger range. So if I like this ran about from 800 to 34, this ran about 25 to 30 points. So this is definitely not uh, this is definitely not a piece of the range, right? It ran just about 20 points. So I wouldn't really like that. I would have instead preferred to participate on the short, but that was in the afternoon, that closer to 14 o'clock news, and I wasn't trading then. But this fair value gap was really nice too, and we were traced into a bullish fair value gap. This blue gap combined with that bearish fair value gap would have been real nice. But again, I didn't like how many points I would be taking. I don't want to be part of the whole range, and it's better to just not trade. This is just what I do. I'm not saying it's better for everyone, but me, if I don't see price being able to move 60, 80 points, like I'm just not going to participate. Now, I don't really see, this is like a market maker buy model, but I don't really see anything too amazing to take here. I mean, we're making lower lows, creating a very low resistance liquidity condition. If you look at this trend, right, we're accumulating so many sell orders, people selling off of this trend, and we go against it with each retracement, accumulating more orders. A lot of inverse fair value gaps you can use each time here, and anyone buying this trend now just absolutely got wrecked with this drop lower back down to the lows, and immediately ran back up so fast it prevented anyone from getting in on this run lower, and unless you're selling, and then it happened so quick I don't think anyone was able to make any decisions, and it ran out the highs, and yeah, closed up there. This is also what I was seeing. The Dow really took a hit, and this is because Target had bad earnings. I think Target took a big hit, and the Dow is a big industrial index, so it's got a lot of stores that are not tech. Like Nasdaq's more tech, S&P is more both, and the Dow is more consumer, industry, manufacturing, stuff like that. So you can see the tech industry is strong, right? It's a lot stronger. The S&P is between both of them, in terms of what companies they have, and so that it makes sense that it's moving sideways, and the Dow is really taking a big hit because consumers are spending less money, and so the Dow is taking a bigger hit than the tech. And this is what you're seeing here. However, because the tech has the biggest companies, it pulls the majority of the market. Like the market is best represented by the Nasdaq because it has the biggest companies, in my opinion, the tech stocks that really lead the entire world. And so as long as the Nasdaq is still higher, eventually these markets, I mean, they might pull the Nasdaq down a little bit, but if the Nasdaq continues to go higher, eventually it'll pull these markets up, which is why if we're in a bearish market and really the stocks are going lower and we're going to go lower, I want to see that the Nasdaq be a leader. Otherwise, it's just going to be a small retracement or a small move lower to create more liquidity. And so this is why I wasn't completely bearish, but we did see a small run lower, and this is very interesting because look at Thursday. It took out the entire week basically. Yeah, it went to Monday's low and it traded way above the week's high, right, making a new high. This was a huge, even the body traded throughout the entire almost week's range. So this is a huge candle, and it took me by shock, to be honest. But I did look at the morning pretty nicely. The hourly chart looked good for a short, right? We have a breaker there. We have a fair value gap here, right? and then you could have ran it down back to these relative equal lows here. But very much of an inside week, a little bit. We have the morning, which again, 10:50, 11:10, another nice run back above these highs into an hourly fair value gap. I believe that's when it came back to the hourly fair value gap. So that's kind of when Thursday when I was recording. That's kind of what I wanted to participate on, right? With this order block here. I remember I had talked about price being able to run off this order block and go higher, and I took a mental trade on this because of the range. Now, hold on, before I talk about that, if you look at, maybe you can see, or maybe not, but I'm trying to point to, yeah, I think this is Wednesday. Yeah, so if you look at Wednesday's range, look how tiny it is compared to this, right? This is why when I say that when I see price only moving for 20, 30, 40 points, I don't really like it, because I don't like, what does price do here compared to what it does on Thursday? Thursday, look at how huge these candles are. Everyone was waiting for the 14 o'clock FOMC minutes and the earnings to get into the market and to speculate, right? Before that, they weren't. They were staying out. The big money was staying out. And so as soon as the majority of the news hit, big money started throwing money at the markets, and that's why the markets are moving a lot. But yeah, I was talking about this, but again, I wanted to buy midway of that gap here. So that fair value gap, I wanted to buy at the midway. I didn't want to buy up here in case they were traced all the way back down here. But I knew that it was possible with this inverse fair value gap that we just came into this order block and immediately ran higher. And it was a real nice run higher. But one thing is, I didn't feel any particular type of way. I didn't feel bad about not participating on this because I knew that the main move was lower, and we were already so far beneath the midnight open. I wasn't looking to go short anyway, so I was okay with just missing trades. But there was one trade that I did take, or I did want to take. As this candle closed there, I put a buy limit on this candle here, and I wanted that candle to drop down into the fair value gap and get me in for a long, right? This would have been just 20 points. Yeah, 20 points. And I wanted it to run up to this level up here. So total, not really the best trade because it's against daily bias and it's just a simple run on liquidity. But it still has the concepts I was looking for. I wanted to see this is the 30-second chart on the 15, maybe there's a 15-second chart that I can show. Yeah, here it is. No, this is a 30-second chart. Okay, I don't show the 15-second chart. But the 15-second chart ran down into a bullish fair value gap, a breakaway gap. There was no other gaps to fill back down here. It just ran down to this, and I called that ahead of time as it was dropping into it. It was already on the chart. And then there was this big bearish fair value gap leading us down into this fair value gap. And so as soon as we closed above it, I wanted price to run higher up to these highs. And this is what is required if you're going to trade on days like this where it doesn't really move much and it's very restricted. You need to go down to the 30, 15-second chart most of the time to be able to find good setups like this. It took a lot of work, but it did end up working. It came back one more time, and I took my buy limit off because it had already ran basically almost the whole range. And so if I was in a trade from here and it ran almost take profit, in my mind, I'm like, imagine if it comes back down to put me in drawdown. I would hate that. So I just took the buy limit off. It came back down and it worked. And I didn't feel bad about it. I was okay with it. And eventually ran all the way up above that high. This is where I could start looking for shorts. But again, we're beneath that midnight open, and I did not want to look for shorts. There's also SMT here, right? But I'm seeing this more as low resistance liquidity. I think the Dow is just getting really beat, and this is fake SMT to just create more liquidity down here, like a trend, right? So that is the end of Thursday. No, are we on? Yeah, that's the end. Now it's Friday, and on Friday nothing really happened. It was a pretty boring day. I did take a trade though, so I'm gonna show that video. It should be uploading soon. But yeah, fortunately, this is the only trade I took this week, and it was a loss. All right, and all that happened was price came back into Thursday's range. It's a Friday, so we weren't expecting anything crazy. And basic moving back into the range type of day. What I wanted to see though, when I took that short in my mind was, okay, we kind of consolidated. Maybe it's better if I go over here. So we kind of consolidated here. We had levels lower, that breakaway gap I highlighted in the previous chart here, and midnight open. I wanted to see if we were willing to sweep all this liquidity, get back to midnight open, and then go higher and retrace into Thursday's range. However, instead, we expanded higher off the 10 o'clock news, and then we just continued higher. I saw this fair value gap, and I didn't really like it, to be honest. It was so small. I just kind of took it without thinking very much. And immediately when it came back down into profit, I took off at like 1.25 tick. I took off half, and then I got the rest got stopped out. Now, I'm glad I got stopped out. I didn't want to go back in when I saw that I got wicked, like if it was still gonna work. And I'm honestly glad I got stopped out because I shouldn't have taken that trade. What I'm happy about is that I was able to take off half, and it didn't work. The way I felt when I saw it didn't work, and I was able to take off half was I was proud, and I was thankful that I had learned to do that, because before I would say I would be uncomfortable with a trade that I took, and I would say that, okay, if it comes back in profit, I'll take half off, and I wouldn't do it. It would come back to profit, and I would keep it, and I'd be like, oh no, it might actually work now. Let's see if maybe I can get a little bit more before I take half off. And sometimes a little bit more would happen, and I still wouldn't do it, and it would come back and stop me out. So I see this as a win because I prevented myself from losing more than I would have if I had just kept everything on. But yeah, not really a good trade at all. It didn't really expand much, and I think I was just looking for a trade for the sake of trading because I hadn't taken a trade all week, and I was uncomfortable buying it because we were above midnight open. So simply, if it didn't want to come back here to midnight open, I should have just not traded. And if it did come back to midnight open, then I should have traded. And that's all. Oh, and about Target, some of these earnings. So I think Target had a big miss on their earnings, right? Their revenue's down, and they're talking about how this is why the Dow took a big hit. And they're talking about how customers don't have enough money anymore. McDonald's talking about the same thing, how their customers don't have enough money to buy their products anymore. And you see they've taken a big hit. So there's a lot of companies that are losing on their earnings. Huge corporations. I mean, look at McDonald's. You know, how many times have they taken losses on their earnings? You know, not since COVID and 2022 when we had a big bearish year on the stock market, right? And not, you know, a lot of their earnings have been good. So the fact that they have a bad earning here is showing you that the customer does not have much money to continue buying their products. And it's not just them, it's Starbucks, right? The KFC. There's lots of, I don't know if Starbucks does, yeah. So Starbucks, 2 earnings that are negative in a row, right? 14% miss on their earnings. So this is all happening. But Walmart, if you look at Walmart's actually up on their earnings. Walmart took a huge gain. So it makes you think, oh, maybe they're just losing. You know, corporations are losing to other corporations, but no, because if you know what Walmart is a very big value store. I worked in a Walmart, and it's very, cheap stuff. Some of the Walmarts don't even have a grocery section. They just kind of sell toys, cheap clothing. It's like a value brand Costco, and that just shows you that customers, instead of spending at premium stores like Target, they're now dropping down to Walmart, and other stores like Walmart. And so you're gonna see stocks like Value Village, if Value Village has a stock. You're gonna see stocks like Walmart, with value stores that more poor people shop out, go up because the consumer has a harder time spending. And so this is all happening in real time. There's a lot of moving parts that are kind of leaning towards, okay, inflation is very high, and customers don't have enough the means to continue spending the same amount of money they're spending. And so these corporations are taking a hit on their earnings because they're not getting enough revenue as they predicted, or they're having to keep prices, like McDonald's, I believe, is doing this. They're keeping the prices low, but they're suffering in their earnings. And if you look at the FOMC minutes report that occurred on Wednesday, they're debating. I have a news article that I was reading about it, but they're debating actually raising the rates now, which is not surprising. But this is what was said on an article. Minutes of the May 1st meeting released Wednesday and showed that officials also debated whether their key rate was exerting enough of a drag on the economy to further slow inflation. Right, so they've talked so much about cutting rates this year, as early as the summer, and even in the first quarter, that what happens is people, they put their money into the markets, they start spending money, they start taking out loans, because they're expecting these rates to come down, and so it encourages people to get into more loans, variable loans, right? Because they don't see the rates going up. Even my my boss is not also my friend. He owns stores, and he took out a loan, and he was encouraged to take out a 1-year loan because his banker told him rates would be lower next year, and so he's going to come back to get a new loan, with the potentially lower rates or higher rates. It doesn't matter to the bank because at the end of the day they're going to be giving out the loan, but everyone was telling him rates are going to be lower next year, and they're not lower, right? Because the thing is, the government and these banks, they like to talk about lower rates just to get people into loans. And so that's the whole purpose about having FOMC meetings. And the Federal Reserve knows that it won't be able to lower rates. It knew that last year, but they still talked about lowering them because it gets people to do the same effect than if they actually just lower the rates. Like, if they actually just lower the rates, there would be no difference than if they just talked about lowering the rates. And so that's why now they're saying, okay, well, we can't lower rates. We can't sit here and pretend like we can lower rates for much longer. So we're going to have to start debating about raising the rates. And it's a slow move back to quantitative easing, back to being more restrictive on monetary policy. And they're just trying to survive, basically, until the presidential election. And so really all this is very political. But yeah, so the market right now is very two-sided. We could have hyperinflation, or we could have deflation in the coming years. And there's nothing certain about in the next weeks either about where we're going to go. We're just at an all-time high, and it's possible that we start to create a reversal, or that we just continue break out to higher levels. Either way, we'll see what happens, and I'll be back next week. That's all. Stay safe.